Hey guys, welcome back to the channel. Hope you're all doing fantastic today. My name is Bidier, and today I want to talk about Robinhood users steal from the rich to fill their Bitcoin bags. Cardano founder Charles Hoskinson calls crypto a political movement. Analyst predicts next bull run will send Bitcoin to 150k and Ether to 9k. Saudi Arabia's monetary authority taps blockchain for money transfers. CoinMarketCap users are calling out the latest exchange rankings. Tron 4.0, slated for July 7th launch, offers users increased privacy and more. Coinbase suffered outages after seeing traffic spike 5x in 4 minutes. This is Techciety. Robinhood users steal from the rich to fill their Bitcoin bags, according to Max Keiser. He's calling out Warren Buffett over the recent losses in the airlines sector. As if you've been keeping up with the news about that, Warren Buffett basically said, you know what, I'm going to sell all my airline stocks. I'm out of here. See you guys. Peace. And so Max Keiser says that Robinhood users had stolen his money and created wealth for Generation Z. He's claiming that users of the popular Robinhood stock and cryptocurrency trading app has stolen Buffett's money by capitalizing on his recent losses in the airline sector. He further suggested that the profits made on Buffett's mistimed stock sales were being invested into Bitcoin. In early May, Buffett told shareholders of Berkshire Hathaway that he had sold all of the company's airline stock at a huge loss. They're also saying that users of the millennial-friendly zero-commission Robinhood trading app swooped in and bought the dip, snapping up shares in both Delta and American Airlines, according to Business Insider. With airline stock since starting to rally, Keiser took a dig at his old foes, saying that the Robinhood users had stolen his money, creating wealth for poor Gen Z kids. He went on to suggest that users were picking over Warren Buffett's career corpse, booking huge profits on his mistimed stock sales, and then rolling that money into Bitcoin. Keiser has a history of animosity towards Buffett, who has in the past famously described Bitcoin as rat poison squared. Last month, he suggested that Buffett's stance on Bitcoin had killed his reputation. However, even US President Donald Trump has called Buffett out for selling his airline stocks, saying that he had made a mistake. Meanwhile, the Robinhood app goes from strength to strength, raising $280 million to surpass its financing goals in a recent funding round. Cardano founder Charles Hoskinson calls crypto a political movement. During a recent AMA, Charles Hoskinson, the founder of Cardano, described it as inherently political, urging the crypto community to rally against efforts to stifle the space. He goes on to say that during an impromptu Ask Me Anything on YouTube, he asserted that crypto-driven fundamental disruptions to monetary relations will not come without struggle. Okay, so he's saying that everybody has to take a stand against the increasing regulatory moves to crack down on encryption. Crypto is as political as it gets. We're going to reinvent the concept of money and take it out of the government's hands and control it ourselves. And again, this is a very good idea for everybody to get into crypto, because with the government printing more money or doing whatever they want with money, it doesn't really give much control to the everyday people, saying, well, look, you can do what you want, but I want to do, what I think is best for me. I don't want to have whatever I own go up or go down in value based on your decisions that may or may not be good for me. I want to be able to have control over my money, and that's why it's becoming more and more out of control with governments and the fiat money. So it goes on to say that regulators are moving against encryption. Everything has to change. Okay, trade changes, property rights change, businesses change, the business structure changes, laws change. Hoskinson predicts that crypto assets will face increasing hostility from regulators, saying that there are people in the Senate and the Congress today in the US and all around the world who want to ban crypto. The Cardano creator urged the crypto community to fight against regulatory efforts to constrain crypto, saying that if you're in this industry, what do? Do you just roll over like a dead dog and say, well, it was a lot of fun, okay, all right, whatever? No, I'm sorry, you have to have an opinion. You have to fight for the right things. And right now there's a strong movement to ban encryption so that when you have encryption, you need to have a backdoor in the system. Will you guys use Cardano if it has backdoors in it? And we designed the system that way, and some small group of people have control over your money and at any time can freeze it. How many of you would use that? I mean, if you've ever traveled overseas to another country, you know that your funds can be frozen. You try to buy something in a store or wherever with your credit card, and they say, "Oh, your card declined." Even though that you know that you used it several times before in the past, you may even have a very low balance on it, and you might have been paying it off. It seems shady, right? So even though you know it's not shady, the third party people say, "You know what? I'm not too sure about this. Are you like in a different country, or are you different? Are you the right person that's using this card?" So they say that we are going to put a freeze on your account, and you won't be able to use your account. And what's left for you? You're stuck hanging, and you don't want to be doing that. You want to have control over your money, and that's the solution that cryptocurrency is solving. That's why it's very important for us to fight for our right to have control over our own money. Analyst predicts next bull run will send Bitcoin to 150K and Ether to 9K. So the co-founder of BlockFi believes that the bull market will return, seeing Bitcoin price rise to 1,400% to hit 150K, and ETH and other solid altcoins making even more impressive gains. He goes on to say that he believes that a bull run will return, propelling Bitcoin to a price of 150K. Simon Dadik suggested that these gains will not be reflected across the entire cryptocurrency market, although the more solid altcoins should also see impressive price action. They say that there is no return to the crypto mania of 2017. Bitcoin's dizzying ascent to its current all-time high of almost 20K. Bitcoin's dizzying ascent to its current all-time high of almost 20K in December 2017 came complete with a media frenzy around all things crypto, coupled with a boom in initial coin offerings or ICOs, and fueled by investor FOMO or fear of missing out. Money was thrown at literally any product in the hope that it would mirror the gains of Bitcoin. He goes on to say that the run in 2017 probably won't happen again, but he does envisage a Bitcoin bull run returning and pumping the few solid alts out there. And as we all know, not every altcoin is going to be solid. There's almost 4,000 different ICOs or different altcoins out there right now. So there's no way that all of them will be solid. Not all of them will work. You have to believe in the fundamentals of the coin. You have to believe in what the project is actually doing, what problem it's trying to solve, and if you can actually see if it's going to be sustainable over time. So you have to do your own research. You have to make sure that what you're doing, what you're getting into is going to be solid, and hopefully, you'll come out on top. He went on to say that as a number of price predictions, such as Bitcoin gaining over 1,400% from its current price of around 9,750 to reach 150K. Ether is set to fare even better, according to data, increasing more than 3,570% from its current levels of $245 to a price of $9,000, whereas Binance Coin or BNB is predicted to have a 2,750% rise to $500. And I think right now it's about $15. Yeah, it's actually over. It's actually at $17 right now. So Dadik basically says that a number of his price predictions are Bitcoin to gain 1,400% from its current price of around 9,750 to reach a target of 150K. Ether is supposed to go up 3,570% from 245 to 9,000. Binance gonna go to $5,000, which is a 2,750% rise from its current price of $17, as well as Chainlink and Tezos also having a 4,450% and 6,800% gain, respectively, according to a price target of $200. But this all fades into insignificance compared to Didik's prediction for VeChain, with a seemingly modest target price of $1. However, this marks a massive 14,100% increase on its current price of 0.7 cents. Even back in the beginning of June, it was just under 0.65 cents just a week ago. So this is not financial advice. Again, these are just predictions of what may or may not happen. And these are things that this analyst believes. So remember, you got to do your own research. This is not financial advice. This is just an analyst saying, hey, this is what I think. Remember to do your own research before getting into such projects. Saudi Arabia's monetary authority taps blockchain for money transfers. SAMA, or the Saudi Arabian Monetary Authority, has recently tapped blockchain technology to execute money transfers and deposits. This step is in part of the financial authority's plan to keep up with the trend of digital currencies. The institution is about to put the relatively novel blockchain technology to the best use to go with the flow alongside the digital financial world. They started a new chapter in its modern development by deploying blockchain for recent money transfers with few local banks in the country. The institution used a distributed ledger to deposit part of the liquidity that it had previously stated to be injected into the banking sector. It's kind of a logical step, part of SAMA's efforts and aimed at enhancing the banking sector's ability to efficiently provide credit facilities. As recently announced, the authority is on its mission to explore and experiment with emerging technologies and being side by side with the global trends of central banks in assessing the influence of blockchain on the financial sector. CoinMarketCap users are calling out the latest exchange rankings. They say that the community is taking issue with the fact that BitMEX is ranked 175th by CoinMarketCap, but other derivatives platforms are not properly ranked as well. They had recently introduced this confidence factor for ranking exchanges, and users are saying, you know what, that's not right. This doesn't make any sense. They feel that there's perceived injustices against the popular platforms. A pseudonymous Twitter guy going by the name of Cosmonaut called out CoinMarketCap for placing BitMEX, one of the most popular derivatives exchanges, all the way down at the 175th spot. Such a low position would seem uncharacteristic within CoinMarketCap's new rankings, where web traffic is one of the primary factors. This update comes after a period of several weeks where exchanges were ranked exclusively by web traffic, which also drew criticism. So they say that BitMEX had a near perfect web score of 960, just 40 points shy of Binance's maximum of 1,000. However, BitMEX's liquidity score is 0. The metric only includes spot figures for now. So it says while BitMEX was signaled out by the community, other popular derivative platforms like Deribit and Bybit share its neighborhood with rankings as of press time of 179 and 177. Indeed, an abrupt change can be seen starting from position 175, after which all exchanges have liquidity scores of 0. Decentralized exchanges like Bancor and Uniswap can also be found further down in their rankings. When contacted by Cointelegraph, a CoinMarketCap representative explained that the current rankings only take spot exchanges into account, promising that derivative platforms will soon be ranked as well. However, as pointed out by Cosmonaut, several exchanges in the top 50, like CoinDCX and Huobi Russia, also have liquidity scores of 0, making it difficult to interpret the new ranking mechanism. So there's more work to be done, they say. The previously rejected web traffic metric has been put into question as a reliable predicting factor. Exchanges heavily relying on professional API traders may find themselves at a disadvantage, while the figures themselves can also be manipulated by unscrupulous companies. So again, there's a lot that needs to be changed with CoinMarketCap's rankings. It's not perfect right now. It definitely needs to be worked on, but it seems like it's at least going somewhere that's a little bit more trustworthy, towards something that the people can have like a lot more information, however, I guess I should say, to make a decision on which exchange to use. Tron 4.0 slated for July 7th launch offers users increased privacy and more. Now I know a lot of you guys may not like Tron, or they don't like Justin. You don't like Justin Sun, however, but they are making moves into the market. So it goes on to say that in another significant development, Justin Sun-led Tron ecosystem has beefed up its blockchain network to enable it to keep occupying the front line of the distributed ledger technology movement. As stated in its blog post, the Tron team announced that it would release the 4th iteration of its distributed ledger, the Great Voyage, on July 7th. This move, the team says, brings the Tron Odyssey era to an end and marks the beginnings of the era of the Great Voyage. Since the creation of Tron blockchain in 2018, the team says it has worked hard to roll out 3 significant network upgrades, and 4.0 of Tron, which is now live, is expected to begin a pivotal role in the history of blockchain technology. So they go on to say that it holds the record of being the first smart contract privacy protocol supported by a virtual machine, offers users more security, increased productivity, and energy efficiency. The previous versions of the Tron mainnet were solely powered by the traditional proof-of-stake consensus algorithm, and Tron 4.0 combines the excellent properties of the delegated proof-of-stake and practical Byzantine fault tolerance algorithms to offer users super-fast transaction confirmations, 3 seconds, enhanced security, safety, and more. What's more than the team says, it has integrated a robust TICP cross-chain protocol into the network to allow it to support cross-chain communications and interoperability. At the time when Ethereum is dominating the world of decentralized finance, or DeFi, powering nearly all of DeFi or dApp currency currently in existence, Tron says its latest update comes with an enterprise blockchain solution that will enable financial institutions and businesses to quickly build their customized financial applications. Coinbase suffered outages after seeing traffic spike 5x in 4 minutes. The San Francisco-based cryptocurrency exchange Coinbase has revealed in a post-mortem report that it went down on June 1st when the price of Bitcoin reached 10 grand after it experienced a 5x traffic spike over 4 minutes. According to the report, Coinbase's autoscaling was unable to keep up with the traffic increase, and as a result, its main Coinbase.com, Coinbase Pro, and its mobile applications were all affected. Trading throughout its API, which according to Coinbase accounts for the majority of its trading volume, reportedly remained functional through the outage. The request rate, according to Coinbase, rose 50% at the time, which led to errors when users were interacting with Coinbase's platforms. Later on, another outage was caused when the exchange was trying to deploy a solution that would help its autoscaling handle the situation. Coinbase, it's worth noting, has a history of outages when the price of Bitcoin moves significantly, and has already gone down 4 times in the last 3 months. These outages stop users from being able to manage their portfolios when they need to during volatile periods, and have seen the community criticize the platform on various occasions. So, a lot of things that have been happening with Coinbase and things centered around it has been shown that anytime the price of Bitcoin can go up or down with varying spikes, Coinbase has gone down. And a lot of users are saying, well, that seems a little fishy. Why does that keep on happening? I mean, you guys have been around for such a long time, and you should be able to be used to these kind of things happening, and especially being able to be prepared for a lot of your users getting on, your website. So you guys need to fix it already. So what's the deal? What's a holdup? And I have to agree. It's one of these things where you have to kind of wonder and say, hey, Coinbase, are you going to fix this or not? I mean, this is basically unprofessional at this point. That's going to do it for me for today. I hope you enjoyed the latest happenings in the crypto space. Don't forget to leave a comment to keep the conversation going. My name is Bidier, and until next time, stay bullish.